Hello everyone and welcome to my YouTube channel. For those of you that don't know me, my name is Pankaj. I'm expert in financial products as well as a financial investing advisor. If you are new to investing or already on your investing journey utilizing exchange traded funds or known as ETFs, it is a great way to build stability and diversify your portfolio. In my opinion, one of the first investments one should ever make is in an ETF. If you are unsure what an ETF is, well, then you are in the right spot today because I am going to be breaking down exactly what these exchange traded funds are and how they benefit your portfolio. In addition, I am going to give you 5 of the top ETFs that I invest in personally on a regular basis in my portfolio. If this sounds interesting to you, then let's continue further and watch the video until the end. Hey everyone, Pankaj here, back for another video. If you are new to the channel, hit that subscribe button so you are notified anytime I drop new content. Also, if you could give us a big thumbs up, that would be huge in growing our community here on YouTube. As always, everything shared on this video is for educational and informational purposes only. Please perform your due diligence before investing in any stock or equity. With that being said, let's jump into ETF or exchange traded funds. An ETF could be thought of as a basket with specific products in it. It could be a large basket, it could be a small basket. Okay, maybe we are getting too much into the baskets, but if ETFs are a basket of stocks, it can include 50 stocks, 100 stocks, 500 stocks, or even 1000 of stocks. ETFs can be sector specific or they can just follow basic indexes. They come in all shapes and sizes. And in fact, as of August 2023, there are over 9,904 ETFs traded globally. As of September 2023, the US ETF industry has grown to $7.3 trillion from $4.3 trillion in pre-pandemic years, aided by the 2019 rule passed by SEC to expand competition in the marketplace. As I mentioned earlier, ETFs comes in all shapes and sizes. You could have an ETF that focuses just on the S&P 500. You could have ETFs that just focuses on technology stocks or consumer discretionary stocks or healthcare stocks. You could have ETFs that focus on the little guy or ETFs that just focus on the big guys. There are different ways to manage these ETFs as well. They are passively managed ETFs and they are actively managed ETFs. And what comes along with this? If you are an actively managed ETF, what that means is you are constantly trading in and out of different positions on a regular basis. Based on the ETF, whether it's actively managed or passively managed, their expense ratio changes. Actively managed ETFs have higher expense ratio than the passively managed ETFs. The expense ratio is that you are paying, that's being charged by the manager who is really actively managing the portfolio. Further, if you are investing in an ETF, then what are you looking at? Are you looking for a specific sector, a specific market capitalization, or an index? Or there is even a total market ETF, which track you can guess an entire market. So figure out what type of ETF you want, but also be aware of the expense ratios because some of these actively managed ETFs can see expense ratios above 2%, which can really eat into your performance and your returns over the years if not taken into account. As I mentioned from the start, ETFs are a great way to build stability and diversity for your portfolio from the beginning. That's what makes ETFs a great investment for not only new investors but regular investors as well to continue to build strength for their portfolio. It's a very hands-off approach to investing and a great way to build wealth long term. With that being said, let's dive into 5 of the top ETFs that you can invest in. And as always, I want to be as transparent as possible with you. These 5 ETFs that I am going to give you today are 5 that I invest in on a regular basis. The first ETF that I am going to give you today is the Vanguard S&P 500 ETF stock ticker. As you could probably guess, this ETF tracks the S&P 500. This is one of the ultimate ETF investments that any new or regular investor should have in their portfolio. Now there is numerous different ETFs that track the S&P 500 from different brokerage firms and they are all relatively exactly the same, being that they track the S&P 500. Schwab has their own, Fidelity has their own, and this one happens to be Vanguard's. VOO has a stock price of $465 as of today. Over the past year, this ETF is up almost 27%. The ETF has a dividend yield of 1.36%, and it is considered a passive ETF and a low cost fund with an expense ratio near zero at 0.03%. It means for every $10,000, the expense is only $3. Now, as I mentioned from the start, ETFs are a basket of goods, and they can range from having positions from 40 or 50 stocks to 100 or thousands of stocks. And when researching ETFs, you can look at any financial website and see what their top 10 positions are. And that only are the top 10 positions important. But you also want to see what percentage of the entire ETF do these top 10 positions make up. Now, if you are looking at an ETF that has hundreds of positions in it and the top 10 only make up, let's say 5% or 10%, well, then this ETF doesn't have a huge weightage. You probably want to have a better idea of what else is in that ETF. But on the flip side, if you have an ETF of which top 10 positions are making up to 25% or 30%, then if you like those top 10 positions, it makes better sense to invest in that ETF. VOO is made up of Apple, Microsoft, Amazon, Facebook, Google, Tesla, Nvidia, Broadcom, and Berkshire Hathaway. The second ETF that I invest in regularly is the Vanguard High Dividend ETF, VYM. Over the past year, the ETF is up only 7%. The dividend yield for VYM is 3.01%. For this ETF, it is a kind of dividend ETF, so the growth is not much, but you get the dividend for this ETF. They are also considered a low-cost ETF with an expense ratio of 0.06%. You can keep this ETF in your portfolio for a good diversification and low cost. It is mostly invested in finance, consumer defensive, and healthcare. The third ETF that I invest in on a regular basis is the Vanguard Technology Information ETF, stock ticker VGT. As you can imagine, this is an ETF that focuses on the technology sector. So here, like with VYM, they were focused on individual dividend paying stocks. With VGT, we are focused on technology stocks and not as focused on the dividend stocks. VGT currently traded at a stock price of $514. Over the past year, this ETF is up 43%. The ETF has a low dividend yield of only 0.06%. The ETF is more actively managed, thus it comes with a higher expense ratio, though in the wide scheme of things, it is still considered a low-cost fund. The expense ratio for VGT is 0.1%. The top 10 positions make up 61% of the ETFs. So anytime these top 10 positions make big moves, you will see the ETF follow suit. The top 10 positions include Apple, Microsoft, Nvidia, Broadcom, Adobe, Salesforce, AMD, Accenture, Cisco Systems, and Oracle. The fourth ETF that I invest in on a regular basis is yet another dividend ETF, and it is Schwab Dividend ETF, stock ticker SCHD. The Schwab Dividend ETF currently traded at $77. Over the past year, the ETF is up 3.3%. Plus, you get a dividend yield of nearly 3.4%. This is a passive ETF, thus it comes with a low expense ratio of only 0.06%. Again, this is a dividend ETF. The top 10 positions make up 42% of the ETF, and they include Broadcom, Merck & Company, AbbVie, the Home Depot, Chevron, Texas Instruments, Verizon, Amgen, Coca-Cola, and Cisco Systems. Fifth and final ETF I will leave you today is one of my favorites. Many of you may already know QQQ, one of the most famous and most popular ETF out there. They handle all of the big technology companies like Apple, Microsoft, Amazon, Meta, Google, and Tesla. It is one of my favorite investments currently. The return is 47% in the last year. This ETF is more actively managed, thus a higher expense ratio of 0.2%. The top 10 positions make up 47% of the ETF. And there you have it, 5 ETFs that I invest in regularly and I believe are 5 of the top ETFs that you can invest in for the long term. Again, ETF investment is not made for the short term, rather it's a long term investment. Mix of broad exposure. You get some ETFs that focus on just technology, and then I have some that are dividend and high growth ETFs. And again, there are thousands to choose from that will fit the bill of exactly what you are looking for. Maybe you are just looking for some healthcare exposure, or maybe you want to be even more focused and look at semiconductor and artificial intelligence ETF, which just invest in companies that have AI exposure and semiconductor exposure. But before investing in any ETF, have an understanding of what stocks they are investing in, and also make sure you have a good understanding of what the expense ratio is, so that you know that your investments aren't getting cut into each and every quarter as those expense ratios are taken away from your investment. As always, I hope you enjoyed the video. In the comment section below, tell me some of your top ETFs that you invest in. And also, if you haven't done so already, please do us a favor and hit that like button and subscribe to the channel, as that will be huge in growing our community going forward. With that being said, we will see you in the next video.